Welcome back to FinWeek Money Matters. Let's be honest, investing is scary. The stock market, with all its numbers, often means that people won't get involved and miss out on good opportunities to make money. Now, one of the great ways to get involved and to have a bit of fun investing is through an investment club. Joining us now to take a look at the practicalities of these, Amelia Morgenrood, the portfolio manager at PSG Konsult. Amelia, thank you for joining us today. Are investment clubs the new poker clubs or the new book clubs, or is there a little bit more to it than that?
I think there's a little bit more to that. The problem is in South Africa, there's no specific structure in place or no specific tax legislation in place to address investment clubs. So when you think of starting an investment club, it's not that easy. First of all, you can't register it somewhere. You can't. The only way to do it is like kind of form a partnership between the various parties involved.
And that's different to other countries, where there are
I don't
systems.
think so.
No, I mean, as far as I know, there's very limited real structures in which you can do it. I mean, you can put it into a CC, for instance, and you can try and do it, but it becomes expensive. I mean, we often all slate the portfolio management, the asset management industry for the cost, but I mean, realistically, the costs of doing a investment club, if you were to go the CC route, you need to have real assets, which kind of defeats the social aspect to a lot of it. I mean, and I think that often you need a constitution which effectively says how members are going to join, how do you accrue assets, how do you divide them up. But there's some very good success stories. I know Amelia's involved in a couple of them as well here in South Africa. But I mean, my wife was involved in one. I think it's a wine club more than an investment club. But but I mean, the reality was there was a group of teachers who got together and they said, look, we want to find out a little bit more about the markets. We want to talk a little bit about. We want to educate ourselves. We don't want to go and sit there and be actively watching the screens the whole time. But they want a way of getting in and put a couple $100 a month. They have a meeting once a quarter or once a month or whatever it is. They drink copious amounts of wine. But jokes aside.
And make the decisions after they've drunk the wine before.
But I mean, essentially the decision is you work your way around the room and you see, well, who's on what cell phone contract? Okay, well, 90% of the room's on Vodacom. Vodacom is therefore be a good share. Where are you shopping this week? It's Spar or whatever it is. They use a lot of common sense in terms of what they're investing in. And jokes aside, I mean, what they've found is that one, they do very well for themselves. They often outperform a lot of the professional asset managers.
So they're not sitting there with financial reports and everything. It's just common sense.
A lot of it is common sense. They'll try and get in a speaker where possible, but they do quite well for themselves. And I mean, that started from very humble beginnings, and I think it now 25,000 rand to buy a share in this investment club. So I mean, that becomes a very real investment in the long run. And what they've seen is, one, they've had fun, two, they've educated themselves, and three, they've seen the benefits of compounding.
Yeah, I suppose it's also about the scale, because you're all able to pool your money, and then that reduces the costs, and then you can invest larger sums of money.
Exactly, I'd say that's one of the key benefits of an investment club. It's just a cheaper way to invest. As Amelia pointed out, you can't buy shares for less than, I think it's about 10k per transaction.
Yes, more or less. Maybe some of the discount brokers you will be able. I would say between 5 and 10,000. Then it becomes sensible.
Minimum 5, they always say.
Minimum, I would say, yes, depending on where you trade. And also, the thing is, if on your own, if you don't have the means and enough money, you cannot diversify. So you can't buy lots of different companies. Like Mark said, it's very nice if you use your common sense and say, okay, you're on Vodacom, we're all on Vodacom, let's buy Vodacom. But that's not the only way to do it, and you can't just buy that one share. So that's another benefit if you pool the funds together, and you can do sensible transactions and diversify your portfolio, buy lots of different companies. And also, if you pool the funds together and also your knowledge together and talk about it around the table, you can make sensible decisions on your own. It might be very frightening, and you might be very scared to do it.
I think it's an excellent point, is because you often I talk to people in my social circle and say, well, why don't you invest? It's scary. Go and get the collective of 5 people who say, okay, well, this is a common sense. I mean, this makes sense. If we lose something, all right, maybe we've risked something. But the reality is Vodacom's probably not going to disappear tomorrow. A group of them get together and they say, all right, together we made this decision to go and do something. And I think that removes a lot of the fear aspects. I mean, I think there's a social aspect to investing that we've missed out on in South Africa. I think that stokvels are fantastically successful in South Africa. I mean, there's billions of rands sitting in stokvels in South Africa, and why do they manage to collect such big asset pool? It's because it's a community thing. It's a group of people agreeing for a single savings goal.
But you wonder, whether it is the substitute for professional advice. What are your thoughts on that? Because, if you have someone who doesn't know something about the markets and then you have 5 people who also don't know about the markets, is 5 people better than 1?
Well, I would say it's beneficial if you could have one of your group members being involved in the stock market or has some experience of it, or maybe is involved in that sector or works in it. So it's always, you should choose your members well.
Choose your friend carefully. You have a clear selection of criteria.
I think that's one of the main things about an investment club. The first thing that you should consider is whether all the members have the same vision or mission or have the same goals. You can't have somebody who's not really committed and maybe invest this month and next month say they don't have the money, they can't bring it by. It's very important that all the members have the same goal and the same aim.
And a constitution which says what's going to happen. Because I think it's one thing to sit there and say as a group of mates we decided, but then if I have a falling out with Jess or Amelia or whatever and I suddenly want to pull my money, it's not the practicalities of actually taking money out become quite a big one.
But they say money and friends should never mix. This is where they are essentially mixing.
And that's where I think that you do need to try and work out exactly who it is. You've got to separate that. Yes, it might be good fun to sit around the table, but you have to have a set of rules that people buy into and they agree to. Because if you have 10 investors and 3 suddenly want to take their money out, it might, or they see the market falling and suddenly they want to get out. It impacts long-term performance as well. But it also creates a lot of an administrative nightmare, because let's say you have 10 shares in the portfolio as well, and suddenly they say, well, I want to sell 3 of those shares, and you can't decide which 3 to. So, and that's why I think maybe one of the nice things that's coming through now is you get quite a lot of these ETF products that they lend themselves ideally to unit trusts, to investment clubs.
I'd just like to put a question to Amelia. What are the tax implications around these clubs?
That's a little bit vague. At the moment, look, there are 2 tax instances that you have to consider. The first is dividend tax, and the second is capital gains tax. Now, the first, dividend tax, luckily it's a withholding tax, so that's not a problem. At the moment, there's still, it's not very clear exactly how, because how it's going to work in future is that whenever the stockbroker pays over the tax to SARS, your tax number has to be attached to that payment. So in the instance of an investment club, there's no tax number for that account, because if you have 30 members whose tax number is on the account. So they're not exactly sure how it's going to be treated in future, but the withholding tax is paid. So now the second one is capital gains tax. How it should work is that the capital gain for each year should be divided between the members according to their stake in the investment club. That is how it should work, and they should add that, obviously, a part of that to their gross income. Like a normal partnership, that is how it usually works, because the partnership itself is not a tax entity.
But then this isn't, the complications of there not being structures to register these kind of partnerships, as we're calling them.
It's very difficult, because somebody has to take responsibility in the investment club for that. Somebody's got to go and sit down and do the calculation. Say if you have 30 or 40 members and each has a fraction of this investment club, and especially if they have different stakes in it, it becomes more complicated. So there must be somebody in the investment club who will take responsibility for that.
Yeah, and I think the structure is such important. There's some very nice initiatives now coming. For instance, FNB, they've got a stokvel account which actually lends itself quite well to multiple people putting money into. From a structure perspective, you can put it in there. And in fact, I think you can even download a constitution from their website, if I remember. But
so you can use that constitution as a kind of basic
in which to work. So I think that I just listening to this and I was thinking SARS should maybe, if they're missing a trick here, because they should actually get out of, instead of taxing people on it, they should say, all right, well, then incentivize people to join them. In the day, we've got such bad savings.
Set up a structure for investment clubs, and then you get more people investing more money out the system. Basically,
in the past, I've asked quite a few auditors their opinion about the tax, how an investment club should be taxed, and nobody is very sure about it. Some said to me it's regarded as a stokvel, which is not taxable. One auditor told me that it can be considered as a hobby. which is also not taxable, especially if you set up your goals saying that it's kind of a hobby or educational and you're only contributing a small amount every month. I mean, how can that be taxable? So nobody's sure exactly how it should be treated.
Okay, so we talked about tax, we talked about this kind of constitutional rule book, and perhaps also nominating a leader in the group. What are the other issues that you need to address?
Well, I would say the amount that every person will be investing. I mean, if you're only 5 people, there's no use in investing 100 Rand a month. 500 Rand a month, you can't do anything with that. So the amount that you're going to invest, and also whether it will be possible to escalate that amount every year. And you have to decide on your strategy. Are you going to be, do you have a trading strategy? Are you long-term investors? Are you going to buy the shares and just keep them? Will you be getting in some professional advice? Say, invite a speaker to your meetings. You will have to decide how you will treat newcomers into the club. Will it be possible? Because those are very technical stuff. I mean, if you have to run a spreadsheet with everybody's contributions, it's not that easy. You're going to have to get a very clever person to do that. So those things are very important, and the commitment. I think that's the most important thing of an investment club, the commitment of the members.
And I think the commitment thing comes down to make it social, make it enjoyable, that you can
have
come
fun.
Have fun. Because I mean, you know, if you want a boring unit trust, there's 900 odd of them that you can go and pick. But I think the whole point of it is you actually have it as a collective where you are sitting there.
A community, you know, space to get together, see your friends, socialize, and hopefully make some money.
Yes, and make some new friends.
Yeah, absolutely.